Hi, this is CH. This video is part of a series of videos titled My ABCs, or Absolutely Biased Comments, to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Amundi Index MSCI World Fund, which is a passive indexing fund. This video is done as a follow-up request from a viewer's comment in my previous video covering the Amundi Prime USA Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. Before we get into the fund details, let's first understand what is a passive indexing fund. Viewers who have seen this section in my other videos can skip to the next section. Traditional mutual funds are actively managed. There is a fund manager with a team of investment specialists who actively manages the fund with the intent to outperform the market or the index the fund uses as a benchmark. As such, the fund manager and his team does a lot of research and analysis work to try to figure out how to generate the outperformance, and therefore there is a higher cost involved in the form of management fees. Traditional mutual funds are also traded directly with the fund provider, meaning the liquidity is controlled by the fund provider, who can create and remove shares or units according to the transaction flows. These funds have a fixed NAV every day that is used for the subscriptions and redemptions, so everyone who trades on the same day gets exactly the same NAV. Traditional ETFs have the opposite characteristics. The ETFs are passively managed with the intent to replicate as close as possible the specified index that represents the market. Given there is no requirement to outperform or to evaluate the underlying constituents of the index, ETFs require a much smaller investment team with less work involved, so the costs involved in the form of fees are also lower. ETFs, as the name implies, are listed and traded on stock exchanges just like public equity stocks. Therefore, the liquidity is mainly determined by the supply and demand available on the exchanges. An investor can only buy an ETF if there are shares or units being sold on the exchange. ETF providers can create and remove shares and units, but usually do so for large trades only. Given the trading is done on stock exchanges just like a stock, trading can be done anytime while the stock exchange is open and the trading prices will have a premium or discount gap versus the NAV. There are some active fund managers who prefer to run their products on stock exchanges and provide liquidity like stocks. These are termed as active ETFs or actively managed ETFs. The famous, or some say infamous, ARK Invest ETFs fall into this category. There are also some mutual funds that have a portion of their portfolio made available on stock exchanges as an additional trading vehicle for various reasons. These are termed as closed-end listed funds, and generally have only a limited number of shares available for trading on the exchange, so they tend to exhibit a higher premium or discount gap versus the NAV. For example, BlackRock, which has a closed-end listed fund called BlackRock Income Trust on the US stock exchange that is similar to its US mortgage-backed securities mutual funds. Separately, purely looking at classifications here, this is also valid for investment-focused companies such as Berkshire Hathaway. Flipping the combinations gives us passive indexing funds that are really similar to traditional ETFs that simply tracks and replicates an index. But in this case, the fund provider creates the product in a mutual fund structure instead of listing it on an exchange. The Amundi Index MSCI World Fund that we are covering in this video falls under this category. As a passive indexing fund, the Amundi Index MSCI World Fund tracks and replicates the MSCI World Index, which is the most popular global equity market index used in the financial and investment world. MSCI is a US-based financial company that specializes in providing market indexing business and investment portfolio analysis tools. While the indexing business covers fixed income and real estate asset classes as well, MSCI is best known for its equity indices, in particular the popular MSCI World Index series. While the MSCI World Index is commonly used as a benchmark to represent global equity markets, it actually doesn't cover all the markets available. The MSCI World Index captures only large and mid-cap representations from 23 developed markets countries, which translates to about 1,350 stocks. And that in turn covers around 85% of the free float adjusted market capitalization in those 23 countries. So there will be no small cap exposures or emerging market country exposures in this index. There is another MSCI All Country World Index or ACWI that includes another 1,200 stocks from 24 emerging markets countries and is also an often used index, though investors should take note of the differences and not to get confused between them. Given this is a market cap weighted index, country-wise, US comprise about 71% of the index, followed by small amounts in Japan, UK, Canada, and France. The remaining countries as seen here have less than 3% weight each. Sector-wise, technology covers nearly a quarter, followed by financials, industrials, healthcare, and consumer discretionary. Top 10 constituents comprise mainly the US mega tech names, as their market cap have grown substantially in the past decade or so, compared to the rest of the market. The index is rebalanced on quarterly basis. The MSCI World Index was launched in 1986, which gives it a long enough track record through market ups and downs. It also provides the statistical evidence that broad equity markets can deliver around 8 to 9% per annum over the long term. Now that we understand the index better, let's take a look at the fund itself. Amundi is a French asset management company founded in 2010 from the merger of the asset management businesses of Crédit Agricole and SocGen, two of the leading financial institutions in France. Crédit Agricole has 80% ownership of Amundi, while SocGen has 20%. Amundi IPO'd in 2015 in the Paris Euronext and has been growing strongly through organic business growth as well as multiple acquisitions. Today, Amundi manages over 2.2 trillion euro worth of assets, making it the largest asset manager in Europe. Amundi's businesses are well diversified. Client base covers the full spectrum from retail and private banking through third-party distributors, to insurers, to sovereigns and institutional. Europe with France in particular obviously covers the bulk of the business, though Amundi has been relatively successful in Asia, with about 21% of AUM from the region. Product diversification-wise, about half are active managed products, while 19% are passive solutions, which is where this fund falls under. The Amundi Index MSCI World Fund is a sub-fund under the Amundi Index Solutions Fund family. Amundi Index Solutions is set up as a Luxembourg SICAV structure and is UCITS qualified. It essentially covers a long list of passive indexing funds that are way too many for me to count, of which only 5 funds are offered in Singapore as MAS recognized schemes that are suitable for retail investors. As mentioned earlier, the Amundi Index MSCI World Fund is a passive indexing fund, meaning it tracks the performance of the MSCI World Index. Given it is in a mutual fund format and has only one NAV per day, it actually more specifically tracks the closing price of the MSCI World Index. There are also some details of the index itself in the investment policy of the fund within the prospectus, most of which were covered earlier. The fund uses a full physical replication approach, meaning it will invest in all the stock constituents of the index and will allocate as close as possible the same found in the index. There will obviously be small tracking errors due to actual implementation processes, which is similar to normal ETFs. Given this is in a mutual fund structure, NAV is calculated once daily on forward pricing basis, so all the trades for the day get exactly the same NAV. Settlement is 3 days after the dealing day. The fund offers only 2 share classes in Singapore, which are the A12UC and A12SC. A refers to retail share class. 12 is an internal number that means the share class is limited to particular investors, distributors, or countries. U is for US dollars and S is for Sing dollars unhedged. C refers to capitalization, which means accumulation class. These two share classes were only launched in March 2022, so the available track record is actually quite short for us to do performance assessment. As a passive indexing fund, fees tend to be low, with total expense ratio or TER at just 0.10%. Given the nature of the fund and that the TER is already so low, there is no trailer fees that can be shared out, and therefore some distributors may not carry this fund. Amundi allows distributors to charge up to 4.5% subscription fees, although as an investor, you should ask for the same rate as with normal ETF transactions. Fund size is nearly $5 billion currently, which is considered a healthy size. However, I think majority of the assets are in share classes that are offered outside of Singapore. The fund provides standard portfolio disclosures such as country and sector breakdown, as well as top 10 holdings. Given this is a passive indexing fund, the data would be near identical to the index itself. Given the Sing dollar share class is unhedged, there are some performance differences between the US dollar class and the Sing dollar class due to FX volatility. Let's talk about the US dollar class first. As the Amundi Index MSCI World Fund is a passive indexing fund, the performance of the fund in US dollar class is near identical to the wide range of MSCI World ETFs out there. The performance lines simply just overlap each other in this chart, so we can't really see any differences. UCITS versions of these ETFs offer both accumulation and distributing versions, so the fund doesn't gain any advantage in this aspect. So the main consideration here would be whether to go for a mutual fund structure or an ETF structure, which is primarily a liquidity terms question. This is more a personal investment preference, so there is no right or wrong answer here. For Sing dollar, the choices are limited, given there is not much demand for such solutions. The most commonly seen competitor is the Infinity Global Stock Index Fund from Lion Global that tracks the MSCI World Index as well and also has a Sing dollar unhedged class. Infinity does have a much higher TER of 0.64% and therefore results in a slightly weaker performance than Amundi. So there is no contest for this one. With all else being equal, Amundi is the better choice as it has a much lower TER, which translates into a slightly better performance. Comparing against active funds is more complicated. Given the Amundi Index MSCI World Fund has only slightly more than 3 years of track record, it may not be sufficient to just assess performance based on this limited time period. In any case, I have included in this chart some core strategies like JP Morgan Global Select Equity and Columbia Threadneedle Global Focus, systematic strategies like Goldman Sachs Global Core Equity and BlackRock BSF Systematic World Equity, defensive strategies like AB Low Volatility Equity and Fidelity Global Dividend, and also thematic strategies like Neuberger Berman Global Equity Megatrends. Some of these funds benchmark against the MSCI All Country World Index instead of MSCI World Index, so that will lead to some performance differences. It can be seen that each fund has had its ups and downs in recent years and hasn't really outperformed Amundi at the end of this specific time period. However, if I replace Amundi with another MSCI World representative with longer track record, say iShares Core MSCI World UCITS ETF, we can take a look at how these active funds have performed relatively to MSCI World for longer time periods. In this example, I'm using a 10-year chart which shows Columbia Threadneedle and BlackRock have outperformed the benchmark. Now, there are no active fund strategies that can consistently outperform the MSCI World, and the results do differ depends on the time period you are using to do comparisons. Therefore, to go with active funds, it does take a bit of faith to believe that the fund manager will do better going forward, or the specific fund strategy will shine as market conditions change, or over the long term the fund strategy has more wins than losses. For investors who are not keen to take on this uncertainty, sticking with passive solutions such as the Amundi fund or the ETFs would be better. For Sing dollar versions, things get a little more interesting as there are some active funds offering Sing dollar share classes in currency hedged versions versus some others that offer in currency unhedged versions. Therefore, the performance comparisons do look a little different. For the same time period, Columbia Threadneedle Global Focus has actually outperformed Amundi a little. Similarly, if you are happy enough with a passive exposure, the Amundi Index MSCI World Fund Sing Dollar class is a decent pick. With that, let's summarize our findings. Amundi is an established global asset management firm and the largest asset manager in Europe. About 19% of its AUM is in passive solutions. The Amundi Index MSCI World Fund passively tracks the MSCI World Index, which is the most popular global equity market index used in the financial and investments world. The fund charges a low 0.1% TER, which is comparable to most ETFs in the same category. Fund performance is also closely in line with the leading ETFs in the same category, reflecting a small tracking error. That being said, the US dollar class has limited demand as there are already many existing established ETFs that provide similar investment exposures. What the fund is useful in is the other currency share classes. In the case of Singapore, the Sing Dollar class serves as one of the very few choices available for Sing Dollar investors to take a passive exposure on the MSCI World Index. Investors do need to note that this is currency unhedged, and there will be some performance differences compared to the US dollar class. One thing about the fund is that it has only slightly more than 3 years of track record. While we can figure out the US dollar performance using other passive products in the same category, figuring out the Sing dollar performance is more tricky. Investors trying to make performance comparisons with active funds should take note of this limitation. In conclusion, I think the Amundi Index MSCI World Fund is a decent pick, especially for Sing dollar investors that are looking for passive solutions to track the MSCI World Index. This concludes my absolutely biased comments on the Amundi Index MSCI World Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.